Good morning, everyone. Once again, this is Black Forest coming to you with another market analysis video currency breakdown. This morning, we're going to be looking at the USDCHF. But before we get started to break down this chart and this currency pair, we have to state that this video is for educational purposes only. This is not for financial advice. But we all know why you guys are here. You guys are here to find good, free, credible Forex content that can help improve your ability as a trader and to help put a little bit of extra money in your pocket, okay? And while I work hard, and we'll do the hard work for you when it comes to the analysis. All you have to do is watch, like, and subscribe with the videos, okay? Now, with all that said, let's go ahead and break down what's happening on this chart and let us go down what's happening with this currency pair, okay? Now, before we get started to talk about the technical analysis of what's happening on the chart, let's dive in straight into the fundamentals, okay? Now, the CHF, the Swiss franc, did have some good news come out about it on the 7th, and it basically was the unemployment, and the unemployment is a very one of the five major news events that really dictates trajectory and direction of a chart. And the unemployment came out lower than what it was previously, but it came out the exact numbers as what they forecast is going to be, which is good. Because technically that would mean CHF is strong. But I say technically because we still have a lot of geopolitical factors that's putting a dark cloud over the currency's country. The Swiss, it has a dark cloud of hanging over its economy from the geopolitical events that's being suffered by the whole entire European continent. That's been brought about the destabilization of the whole entire current European currency. The Europeans' continent economy by the Russian-Ukrainian war and also by sanctions that seem to have a reverse ripple effect on the European continent's economy. Okay. So they still are dealing with inflation over there. The entire EU is dealing with inflation. The entire European continent's economy as a whole is dealing with inflation, and this inflation is being catalyzed by not only high gas prices, is that they are really feeling the brim of the effect of the Russian sanctions reverse backfiring on them. Because in the sense that this is what's happening, they are trying to place Russian sanctions on Russian goods and Russian raw materials so they can try to punish Russia for for the invasion of the war of Ukraine. But the thing about it is that Europe, including Switzerland, they get most of their raw goods and they get most of their raw goods like lumber, metals, rubber, things of that nature. They get that from Russia. Okay, so if they are sanctioning Russian raw goods, that basically means that they're stopping themselves from buying raw goods from Russia, which means that the companies in the country that uses these raw goods to make consumer goods have to look elsewhere for these raw goods, which means that they have to pay higher prices now for these raw goods, which is also furthering the inflation as well, because these high prices they have to place on raw goods, they make up the difference by rising the prices on consumer goods. Okay. And then also, we do have a lot of FUD surrounding the European continent's economy, which is fear, uncertainty, and doubt due to the whole destabilization of the European continent's economy from the Russian-Ukrainian war. So until we can get some type of ceasefire or some type of ceasefire or halt in hostilities between Russia and Ukraine, or they can come back to the table and have some very good negotiable peace talks, we're going to see a continuation of the weakening of the CHF despite whatever the economic news is. Because we're living in a trading environment in which geopolitics are overshadowing economic news and economic indicators. Okay, so it doesn't matter how good the major three European continents currencies are doing, which is the CHF, the euro, and the British pound. It is going to be overshadowed by the geopolitical events that's dictating the economics of today. Okay, and as long as they keep putting these sanctions against Russia, they're going to continue to backfire and hurt their country. As long as this war between Russia and Ukrainian continue on, there's going to be a continual weakening of these currencies, the major three currencies with the Swiss francs, the British pound, and the euro. Okay, now let's go ahead and go into the USD. Last trading week, we did have a lot of positive news about the USD. We had more positive news and negative news come out about the USD, and the initial jobless claims came out very good for the USD. They actually thought it was going to be 200,000. That's what they predicted was going to be, and it came out 166,000, which is better than what they forecast and better than what it was previously. So that means that the USD currently right now is very, very strong and is going to be gaining much more traction in its strength. Okay. Now, one thing we're going to have to look at to see what's going to affect the USD is gas prices. Because currently, right now, we see gas is dropping, but this is only due to the world countries are releasing gas from their oil reserves and that they're also uptaking gas production. But we don't know how long this is going to last for, and this is only a temporary fix. But for right now, we are seeing a rise in the strength of the USD. Okay, so with all that said, now let's go ahead and dive into what's happening on the chart. Okay, so we did see a push down, and then we started to see a push up, and now we're getting hesitant in this area here, which means that we're going to continue to push up to the long position. Okay, but don't we could also have an initial drop down to either here or here before we continue to go into this long position. Okay, so there's one or three scenarios in which this can pay out due to the current fundamentals holding. Okay, we can range out in this area here, then go up, or we can have a push down to here or even here, range out and do go up. But it still looks like we're going to be going into the long position for the short, intermediate, and long term of this chart. Okay, looking like the new target area is going to be here. Okay, hope that information was helpful for you guys. Happy trading.